I'm staring at a spreadsheet with 5 years of investment data, and it's clear that Bitcoin and index funds have been on a wild ride. My friend, who's a financial analyst, just messaged me with a question: which one would you choose if you had to start over from scratch? And honestly, I had to take a step back. You're probably in a similar situation, wondering which investment path to take, especially with the current market uncertainty and the Fed's pause on CD rates. The crypto market slump has everyone on edge, and it's hard to know what to do. But let's break it down. If you're like most people, you're trying to pay off debt, build an emergency fund, and maybe even start investing for the future. But with so many options out there, it's easy to get overwhelmed. That's why I want to share with you a comparison of Bitcoin and index funds, based on real data from the past 5 years. By the end of this, you'll know exactly how to make a decision that's right for you. My friend's question got me thinking: what if I had invested $10,000 in Bitcoin 5 years ago? According to the data, that investment would be worth around $50,000 today. But, and this is a big but, the journey would have been incredibly volatile. I mean, we're talking about an asset that can drop 20% in a single day. On the other hand, if I had invested that same $10,000 in an index fund, it would be worth around $18,000 today. Not as flashy, but a lot more stable. Now, I know what you're thinking. Which one is better? Well, that depends on your financial goals and risk tolerance. If you're looking for a potentially high return investment and are willing to take on more risk, Bitcoin might be the way to go. But if you're looking for a more stable, long-term investment, index funds are probably a better choice. One thing to keep in mind is that past performance is not necessarily indicative of future results. Just because Bitcoin has done well in the past 5 years doesn't mean it will continue to do so. And just because index funds have been stable doesn't mean they won't become more volatile in the future. So, what can you do today to start making progress towards your financial goals? First, take a close look at your budget and see where you can cut back on unnecessary expenses. Then, consider investing in a high-yield savings account or a money market fund to grow your emergency fund. And finally, if you're feeling adventurous, you could consider investing in a cryptocurrency like Bitcoin or an index fund. But here's the thing: investing is not a one-size-fits-all solution. What works for me might not work for you. That's why it's so important to do your own research and consider your own financial goals and risk tolerance. For example, let's say you're a gig worker with an irregular income. In that case, you might want to consider investing in a more stable asset, like an index fund or a high-yield savings account. On the other hand, if you're a young professional with a stable income and a long-time horizon, you might be more willing to take on risk and invest in a cryptocurrency like Bitcoin. The key is to find a balance between risk and reward that works for you. And to do that, you need to understand the basics of investing and how different assets work. So, if you're new to investing, don't worry, it's not as complicated as it seems. Just start with the basics. Understand what an index fund is, how it works, and what the benefits are. Then, consider investing in a cryptocurrency like Bitcoin, but only if you're willing to take on more risk. And remember, investing is a long-term game. It's not about making a quick buck or getting rich overnight. It's about building wealth slowly and steadily over time. Now, I want to ask you, what's your biggest debt or financial challenge right now? Drop it in the comments below, and I'll do my best to help. If you're struggling to pay off debt, consider using the debt snowball method or the debt avalanche method. Both can be effective, but it really depends on your individual situation. And if you're looking to build an emergency fund, consider investing in a high-yield savings account or a money market fund. These can provide a safe and stable place to grow your money. The point is, there are so many options out there, and it can be overwhelming. But by taking it one step at a time and doing your own research, you can make informed decisions that will help you achieve your financial goals. So, to sum it up, Bitcoin and index funds are both viable investment options, but they come with different levels of risk and reward. By understanding the basics of investing and considering your own financial goals and risk tolerance, you can make a decision that's right for you. And if you're feeling stuck or unsure, just remember that you're not alone. Millions of people are in the same situation, and there are resources available to help. So, take a deep breath, and let's get started. If this video helped you understand the difference between Bitcoin and index funds, hit like. It tells me to keep making content like this. And if you know someone who's struggling to make sense of the investing world, send them this video. Finally, if you want to learn more about investing and how to achieve financial freedom, check out our next video, How to Start Investing with Just $100. Thanks for watching, and we'll see you in the next one. Let's dive deeper into the world of index funds and explore some of the benefits they offer. For instance, index funds are known for their diversification, which can help reduce risk and increase potential returns over the long term. By investing in a broad range of assets, such as stocks, bonds, or commodities, you can spread out your risk and potentially earn higher returns than if you were to invest in a single asset. To illustrate this, let's consider an example. Suppose you invested $5,000 in an index fund that tracks the S&P 500, a popular stock market index. Over the past 10 years, the S&P 500 has returned an average of around 13% per year, with some years seeing returns as high as 30% and others as low as -10%. By investing in an index fund that tracks the S&P 500, you would have been able to capture a significant portion of those returns, while also benefiting from the diversification and reduced risk that comes with investing in a broad range of assets. In contrast, Bitcoin has been known for its volatility, with prices often fluctuating by 10% or more in a single day. While this volatility can be attractive to some investors, it can also be a source of stress and anxiety for others. For example, in 2017, the price of Bitcoin surged to nearly $20,000, only to drop to around $3,000 just a year later. This kind of volatility can be challenging to navigate, especially for investors who are new to the cryptocurrency market. Another important consideration when it comes to investing in index funds versus Bitcoin is the concept of dollar-cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the market's performance. By doing so, you can reduce the impact of volatility and avoid trying to time the market, which can be a difficult and often unsuccessful strategy. For instance, suppose you invest $100 per month in an index fund, regardless of whether the market is up or down. Over time, this can help you smooth out the ups and downs of the market and potentially earn higher returns than if you were to invest a lump sum all at once. In contrast, investing in Bitcoin can be more challenging, as the price can be highly volatile and unpredictable. In terms of specific numbers, let's consider an example. Suppose you invest $1,000 per month in an index fund for a period of 5 years, earning an average return of 8% per year. Over that time, your total investment would be $60,000, and your total return would be around $73,000, assuming an 8% annual return. In contrast, if you were to invest $1,000 per month in Bitcoin over the same period, your returns could be much higher, but also much more volatile. For example, if Bitcoin were to return an average of 20% per year over the same 5-year period, your total investment of $60,000 could potentially grow to around $150,000. However, if the price of Bitcoin were to drop by 20% per year, your total investment could potentially decline to around $30,000. As you can see, the potential returns on Bitcoin can be much higher, but the risk is also much greater. Ultimately, the decision to invest in index funds or Bitcoin depends on your individual financial goals and risk tolerance. If you're looking for a more stable, long-term investment, index funds may be a better choice. However, if you're willing to take on more risk and potentially earn higher returns, Bitcoin could be an attractive option. By understanding the benefits and risks of each, you can make an informed decision that's right for you. It's also worth considering the fees associated with each investment option. Index funds often come with lower fees than actively managed funds, which can help you keep more of your returns. For example, the average fee for an index fund might be around 0.05% per year, while the average fee for an actively managed fund could be around 1% per year. In contrast, investing in Bitcoin often involves higher fees, such as transaction fees and exchange fees, which can eat into your returns. In addition to fees, it's also important to consider the tax implications of each investment option. Index funds are often more tax efficient than actively managed funds, as they tend to have lower turnover rates and generate fewer capital gains. For example, if you invest in an index fund and